What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our private. Wait, hold on. Let me 1 second. Oh, I had another stream going on. Okay, so we should be all set. We should be all good to go, everybody. Thank you so much for joining. And this could be the beginning of a very, very long-term decision as part of our community doing a private live streams. I think it's going to be super insightful. We can do some very good, high-quality Q&A. You can ask a lot of questions. This is going to be 45 minutes to an hour, dedicated time for all of you. So really want to get a lot of feedback, after first couple sessions on how you view this, how excited you are, how much value you're actually getting, and then we'll go from there. So good morning, everybody. Thank you so much for joining. Obviously, the viewership and the like count and everything is going to be a lot lower because it's not a public live stream. But on major events like such as tomorrow, we've got the Federal Reserve meeting, FOMC. So we might do a public live stream. But I think on a day-to-day basis, it's going to be better if we just keep it super closed group of people and our community members. So we can have a very, very lively discussion and engaged Q&A for everyone. And this way you actually know, right? Everybody that you are talking to in the comments is a MoneyVest member, is a community member. So that way we have our own time for 45 minutes to an hour to discuss whatever we want. So yes, quality and focused, Dave, 100%. And this way I actually get to engage and interact with every single person on a very personal basis. So I think that's incredible. So okay, let's talk a little bit about the markets here. We've got Broadcom slightly down about 40 basis points. We got Advanced Micro Devices up over 30 basis points. We've got QQQ slightly down after yesterday's sell-off over 19 basis points here, and S&P 500, of course, down over 30 basis points yesterday, essentially flat at the moment right now. December has flipped back to red. We've been kind of flipping back and forth. We were green, then we were red, then we were green again, and now we are red again for the month here on the S&P 500. We're still on a 7-month streak for the S&P 500. So if you come over to the MoneyVest platform, again, under macro dashboard, you can pretty much check this yourself, but under SPY seasonality, you'll notice that we are on this 7-month streak. May all the way through November, the markets have just ripped higher to new all-time highs. December, we are essentially flat. If you were to see 8 straight months in a row of green, I think we have to go back to 2017, where we saw about 1, 2, 3, 4, 5, 6, 7, 8, 9 straight months of gains. I mean, 2017 was almost a perfect year where the markets were green every single month, except for March, where we were slightly down about 4 basis points. So it was, almost nothing. It was essentially a flat month here, but every single month then was a very strong green month. So 9 straight months in a row of rally for the market. So we'll find out if this month, December, is going to be this 8th month in a row. And then January of 2026, what we have in store for 2026 is also going to be very, very important because we got lots to look forward to, including the a little bit of the changes that's going to happen in the FOMC with the new chairman of the Fed. First 3 months, very important quarter for earnings, and some good guidance and some good visibility is what we're going to get for the trade related to AI. Of course, NVIDIA is ripping higher, starting to sell off a little bit from its highs of 189, 190. It's back down to 185, 186 here. But then, of course, great news for NVIDIA being able to sell its H200 chips to China, with the U.S. government taking a small cut along the way, right? So taking a bit of a 25% cut there. Okay, good morning, everybody. Again, thank you so much for joining, and it's very, very good to see you all. And any questions, feel free to write them in the comments, and I will again personally read them off one by one and go over any questions you might have. It's going to be like face to face with the code. Yeah, it's going to be fun. I think it's going to be great. It's going to bring a lot of value, and I'll be able to answer, because sometimes, even on Discord where you are tagging me or someone else and, your question sometimes gets overlooked because I know it can get a bit crazy in the Discord where there's a lot of engagement, a lot of discussions, but this is the time where I can go over stocks for you. We can do thorough fundamental analysis, some due diligence on individual companies, technical analysis on stocks, what price targets to look forward to. You can ask me about options. If you have current options, we can look at it as a team. And that's how we're going to treat every single question. You're not just going to get my opinion, but I encourage everyone to answer other people's questions in the chat as well, because that's going to allow us to not just get one opinion, but everyone else's holistic opinion. And so we can, get the most out of it. So if there's any questions, definitely, feel free, other members, to chime in and help other members, because that's the core philosophy of our community, is to help each other. That's what keeps us going. And that's why people feel welcome and safe to ask questions, and we can kind of tag team this together. Everyone can help each other, right? That kind of snowballs from there. Okay, let's get started. Please talk about gold and silver and also crypto. And I would also encourage, keeping your questions extremely specific. What about something you want me to kind of go over? Yes, I can talk about gold and silver from a long-term perspective. I can talk about it from a short-term technical perspective. I can talk about it from an asset allocation perspective. We can also talk about, the correlation matrix. I've also gone over that in my previous videos. S&P 500 correlation. Let me see if I can find it, where that correlation matrix is. Correlation. Let me see. I forgot what... matrix, maybe? I have a lot of spreadsheets that I need to kind of organize a little bit better. But I remember having a spreadsheet that goes over very, very nicely the correlation for the market. But nonetheless, let's just come back. I'll find that eventually. But gold here sitting at just over $41.99, so a little bit under $4,200 per ounce. From a long-term perspective, gold is, or has been, always on my radar for accumulation and dollar cost averaging. So right now it's trading at a support roughly at 41.69, 41.70, resistance all the way up to 42.43. You could argue that we're seeing a little bit of a bull flag potentially for gold as it continues to trade sideways in that range, and eventually could lead to a bigger breakout. So gold for me has been an easy DCA. Every few weeks. Right now it's trading at $4,200 an ounce. Am I buying right now? Probably not. I may pick up a little bit, right? So much so that it doesn't dent my cost basis, doesn't move up my entire position to the current price. But gold long term, I will continue to add. It's going to be a small portion of the entire portfolio, just as a hedge. And right now we're once again, in a very, very nice context of a higher high, higher low pattern. So resistance up to 42.50, a breakout above this, and we're looking at that next target of all-time highs at just under 4,400. Silver already trading at an all-time high, so that's actually very, very good to see. It did pull back, rallied back up, pulled back, and then rallied back up to new all-time highs, and right now it's fighting up that resistance at around 59, closer to $60 per ounce. Silver, I am more bullish on than gold, and in fact, I did pick up silver earlier in the year. About 1 kilo, small brick that comes in, and resistance is going to be just, like I said, under $60 an ounce, and support level is going to be right around $56, $57. I think we've been joking about gold and silver going to Costco, picking up some coins for quite a while, right? Even back in the summer when I was in the US, I was like, who wants to go to Costco with me to pick up some gold bars? Who has the membership, right? So we can do that. So I think gold and silver deserve a small percentage allocation in everyone's portfolio. That's my personal opinion. I think 2%, 3%, 5%, depending on your level of conviction and how much you want to allocate. But I think it does deserve a spot in the portfolio. As a whole, portfolio allocation, gold and silver have their place. When it comes to crypto, it's a little bit different, right? So Bitcoin and Ethereum is going to be different in terms of volatility, in terms of liquidity, in terms of objective, in terms of risk tolerance. There's a lot of factors at play. Gold and silver have a much longer, historical data that we can analyze. I mean, they've stood the test of time through not just hundreds, but thousands of years. They've been the, largest mode of currency. With crypto, it's fairly new, right? 2 decades old, not even 2 decades. But it is proven to be one of the strongest asset classes that has also held up, during times of distress. So obviously it's gone through multiple cycles of bull and bear cycles here. So it also, in my opinion, deserves a bit of a spot here. Just again, depends on your level of risk tolerance and volatility there for crypto. So for me, as you guys already know, for Bitcoin, I have BITX. For Ethereum, my positions in BMNR and ETHE. And so these are positions that I'm kind of comfortable. If they go down to zero, fine. If they go up 10 times, that's also fine, right? So that's an asymmetry that I'm targeting with crypto. So it's not a large position, but it's a reasonable position where if it goes up, great. If it goes down, it doesn't change my my portfolio. Okay, yes, so when it comes to the economic calendar, we are adding that. So there's 3 things that we are going to be adding to the MoneyVest website. We just need a little bit more time because we're just kind of working through that transition. So the 3 things are going to be the analyst estimates that are going to be added under fundamental analysis. So if you come over to the market dashboard here, let's just go over to any stock, for example. Let's go over to Oracle, just for the sake of this example. Few things that are going to come up. Under fundamental analysis, you'll notice that analyst estimates are not there yet. So we're going to be adding that. That's number 1. Economic calendar, as you pointed out, yes, it's going to show up right here. So we're going to split the calendar into earnings and economic. So as we had it previously. So it's going to show up as well. We're going to change the layout of the earnings calendar as well. Make it very similar to what we had in the previous version, because I like the layout of that, because you've got the EPS and revenue expectations. Unless if there's a consensus, we'll bring it back to this layout. But I do like the previous layout. The design is excellent. The layout is going to be the old one, and then we're going to add the economic calendar, analyst estimates, and elite investors. So that is also going to be getting added very soon. So all those 3 things are going to make their way over to the platform very soon. Once that's done, then we're going to be adding more features and more models to the platform moving forward. Shrikant, can you put some light on the sell options? Is this the right time for some puts? Which tickers? So, as I've mentioned before, and I had this really long conversation with one of our other members the other day, and that is that when you are selling options, right? And you guys probably already have access to the options checklist. Let me just bring it up here. Options wheel checklist. This is something that you can download from the Patreon, right? So you can actually use this as a good checklist for every options trader, right? If you're a part of our community, if you're watching the live stream now, or if you've been part of the options trading journey for a long time, this is a PDF document. It's a 2-page document that I highly recommend everyone to just simply download and go through it. Just go over it once, because you'll have a much better idea on what things we consider. Fundamental, technical, risks, must consider things right here. So you've got all of that. And then always remember, right? Things that you need to always remember, important things to remember, and then some terminology to kind of always know, okay, what they actually mean. So this is a PDF. Download it on Patreon. It's available. There's a lot of content on Patreon that I've already, pre-recorded educational videos on stocks and personal finance with downloadable spreadsheets and PDFs. There's just a lot of value. So definitely go check it out. But when it comes to selling puts, right? When it comes to selling puts, I always mention this one thing, right? So must consider, wheel a stock you have a high conviction, right? Over 80%, right? Wheel a stock you can and want to hold long term, right? And wheel a stock you understand inside out, right? CSP, ask, do I want to own this stock long term? If the answer is no, don't trade this stock. Very, very important, right? This is one of the most important things, because as I mentioned before, there is no benefit to rolling a put. None. 0. Right? If you are rolling a put, it's a very high likelihood that you're trying to avoid assignment of shares, and that is not the goal with the CSP. Because when you're running a wheel strategy, you don't start the wheel if you don't get assigned. If you're constantly trying to run away from assignment, we never start the wheel. Right? The wheel only starts when we sell a put, get shares assigned, then sell a call, right? That's the wheel strategy. So if we're running the wheel, we need to eventually be okay with getting that assignment on a CSP. So these 3 things always need to be considered when you are selling an option. Is you have high conviction in that stock, you understand the business inside out, and you actually want to accumulate and hold that stock for the long term, because that's what should get you excited, right? If a stock is coming down to that strike price and you're like, wow, it's coming down. I wanted to own this stock at this price. Now it's already here. I'm going to get assigned on those shares. That should bring a level of excitement not nervousness, not stress. That how do I get out of this? I don't want to buy these shares. I want to roll it up and out. I want to get back out of them. And that should not be the end goal. The end goal should be, okay, it's coming down, come down to a great price, let it come to you, and I'm excited to own it. That always needs to be the case. So coming back to the question here, so selling options, shedding some light there, and which tickers to consider. Obviously, everyone's going to have their own watch list to consider for puts. I know a lot of people are trading SoFi puts right now after the big sell-off, after the convertible bonds, and of course the issuance of more dilution, selling off support level $24, $25. So that's a nice strike put for people to consider. HIMS is another one that has been trading down aggressively. $34, $35, very close to a potential CSP. Oracle, we've been talking about this on the channel for quite some time. It's been selling off aggressively, $180, $190, even $200 put is going to be quite reasonable. Meta has moved up quite a bit. Of course, there was a couple different plays at sub 600, sub 590, either straight up accumulation or selling a CSP, and then of course, banking on that premium there, because premiums for Meta are really, really attractive. They're very juicy. In fact, if I get expired out of the money, which from the looks of it right now, it's looking pretty good because we're back under 665. So I'll see where those options are today, right? I'll see where that covered call is. If it's back out of the money, I will close it for profit, and then I'll sell a new one, right? I'm selling at the money calls like that. There's a little bit of luck involved as well, because the last couple of weeks have been a little bit lucky, where Meta last week, if you come take a look at Friday, where did we close? On Friday, we closed at 673, but the low was 662. So when it was indeed out of the money, the option went up 65% in profit. I closed it, and then it closed at 670. So had I held it all the way till expiration, I would have been in the money, expired. But I closed it early, and then I opened the new one. And then right now, it looks like luck is favoring me again as it's trading back below 665. So, so I'm going to close it out and then open a new one once again. So there's a lot of options to look at. As I mentioned, SoFi, HIMS, even Oscar, I think, has been selling off aggressively. It's got some pretty decent support down as low as $13, $14 to consider. Those are the ranges. And then Oracle, Meta, even Microsoft was a good value play, trading down to those levels of 460. It's moved up a little bit, back up to 5 to 6% here. So that's where we are with those companies. Okay, gold and silver, based on tomorrow's Fed meeting. Yeah, so I think interest rate cut is already priced in. A lot of it is going to depend on 2026 and what the Federal Reserve is forecasting for. As I mentioned, the most important variable is going to be 2026 rates. What the Federal Reserve pencils in for the 2026 number is what's really going to matter for the Federal Reserve. So that's really, at the end of the day, for the market, for the Federal Reserve, 2026 is what really matters. Okay. Jojo, are you folks done with your tax loss harvesting for the year or waiting for the last week? Yeah, I think it's time to start planning and strategizing on your tax loss harvesting. I can, certainly maximizing your contributions on those limits, yearly limits that you have, making sure that you take advantage of those. And of course, tax loss harvesting to make sure that you can write off some of those losses, because it's been a very, very strong year for gains, right? So it works a lot better when you've had a very strong year for gains, that you want to actually harvest some losses and write off those gains to lower your taxable bill. In a year where everyone is losing and the markets are down, it doesn't really matter because there's not a lot of gains to write off anyway. But yes, definitely it's part of the strategy and something I think a lot of people should consider, especially when we are in the last couple of weeks here as we're closing out the year. Any thoughts on UnitedHealth? So let's take a look at UnitedHealth here. It was selling off aggressively. What a sharp reversal from its lows of 230. It's back up to over $320. 40% rally there. At one point, it was up over 60%. This old resistance is now acting as a very strong support for UNH. So this right here is going to be a support to watch now, and a resistance all the way up to as much as 372. For UNH, it's a dividend play. It's a decent company. It's a good stock. Consistently growing revenues year on year. Profitability is decent as well. If it fits your portfolio, it fits because it's not a growth company. It's not a growth stock, so to speak. So dividend yield is pretty decent. We got a pretty strong support down here at 315, 316. Resistance all the way up to 370s for UNH. So there is some decent upside of 15-16% from these levels. Okay, what is your exit strategy for gold? I happen to unknowingly accumulate with 200% return over the last 5 years. Now wondering and seeking guidance on how to exit. So Wamsi, it's a great question. And always you want to think about the exit strategy as well, because at some point you want to ring the register, take some profits as well. If I'm being completely honest, I think gold has long-term huge value. Especially when you consider the state of geopolitics and fiat currencies and the amount of printing, just the overall landscape. I think gold has more upside potential. That's one of the reasons why I do prefer accumulating physical gold as opposed to just buying it, straight off an exchange. It's a small part of me that feels like I should have some physical gold as a store of value that's away from any exchange. It's very similar to how you would want to store crypto on a cold wallet, off the grid, essentially. Very similar to that is the whole thesis behind gold. Now, if it comes to the exit strategy, for me, gold is a ultra long-term hold. I'm not planning on exiting my positions for gold or silver because, for one, I expect more upside, and for two, my objective with commodities isn't to make money, it is to preserve capital. So it's a little bit different, right? If I'm preserving capital, it's not something I would sell and then convert it back into fiat. So the two outcomes with that need to be met. It is, okay, I expect upside, even though that's not my objective, but I do expect more upside long term. And the second thing is, I'm not looking to make money, I'm looking to preserve capital by investing in some commodities like hard assets like gold and silver. So hopefully that answers your question. That might be the Indian genes, hoarding physical gold, that suffer from it too. Yeah, I know it is. I think our parents kind of instill that into us from a very, very young age. When your mom opens up the jewelry box and shows you all the different pieces of jewelry, then you're like, okay, I want to do that. I also want to have some gold and silver. But yeah, that's kind of like my quick take on it. But if you do want to have an exit strategy, I think 200% gains are incredible. I think that's absolutely phenomenal. You've more than tripled your investment there. And you can rotate that capital into other opportunities that you might feel are undervalued. That's another thing, that I've learned over the years is how important, reinvesting capital is. Of course, it's one of the first lessons is to always hold on to what has been a very successful winner and never cut your winners too early. Cut your losses and hold on to your winners 100%. But then every investment needs to be evaluated individually, how much more potential upside you have, and whether that capital is better invested elsewhere, or if that is still the best of the best opportunity in the market out there. So that's that. Typically wait until the very last minute, literally December 31st to tax harvest. Yes, last day, last minute of the trading hour, I think is when I do my tax loss harvesting. So yes, I think that's that's a very smart and sane way to do it. Awesome, thanks. So what tool are you using for trading? My broker is IBKR, but their desktop app TWS is too slow on Mac. Can I use another tool while keeping the same brokerage account? So the brokerage account and whatever they give you is always going to be the same, like, whether that's a mobile app or a web app or web platform, whatever, that's always going to be the same. There are some websites that allow you to link your brokerages. Like, for example, here, you've got TradingView that has partnered with all of these different brokerages. IBKR is not part of it. But a lot of the other ones are, so you can certainly look into those and see if you want to connect your brokerage to TradingView and then place orders on TradingView. That's going to simply be synced with your brokerage. So that's also available here. But a lot of these, I've honestly not heard a lot of them. Like Pepperstone, I've heard of IG. Oh, Interactive Brokers is right there. It is there. So it is part of TradingView's ecosystem. So you might want to consider linking Interactive Brokers with TradingView to see if you can place orders through TradingView if you don't like the UI being provided by Interactive Brokers. But I have IBKR app, mobile app. I've not had any issues. I like the application, but there's also an option to connect it through TradingView. Yeah, so Jordy just mentioned that. I'm also on IBKR. You can link it to TradingView. Good morning, all. For those members who have not taken advantage of the education, please consider checking it out. Knowledge will power your financial future. Thank you so much, Mike. I appreciate that. And yeah, we're all here to help each other. I'm learning every single day. I don't have all the answers, as I've mentioned this before. I can't predict the markets, as I've mentioned this before many times. So part of investing and trading, and I think it applies to very much in a lot of fields, is constant learning, right? Constantly evolving your way of thinking. There's been so many times like I've learned things that have completely changed the way I used to think, and now it's completely different. So it's evolving, your education and learning as much as you can, because everyone's got something different. Everyone's got something different to offer, and you can learn something from everyone. So that's really what I want the core of our community to be, is everyone learning from each other. Okay. What's a good level to buy HIMS? Let's talk about it together. And again, feel free to chime in, share your analysis with everyone as well. I appreciate it. Everyone else appreciates it as well, because we can get a very holistic idea of the market and what the stocks we're looking at. So for HIMS, I think $34 to $35 is a pretty strong support. It seems to be struggling at this resistance right now, somewhere between 39 and $40. So this right here is going to be that resistance. If we do get a breakout, I think $47, $48 is very possible for HIMS, but support level is going to sit at a $34, $35 for HIMS. So that's a level to keep in mind. Is Broadcom a swing play? Well, Broadcom is already trading at an all-time high, right? It's pushing up after hours from yesterday, pre-market also, but right now it's slightly down. But I wouldn't consider this as a swing trade right now, because it's already rallied quite a bit. I mean, it's already trading at an all-time high. Was it a swing trade back when it was at support at 320s, 330s? Yes, absolutely. So it was trading down to that support here just a few weeks ago, middle of November, and then it rallied 20%. So yes, that was a good accumulation zone. And right now we're at all-time highs and a resistance. There are better stocks to look into. Like I said, Oracle was one of them. I think Netflix is showing some good signs of potential here, given that it's been selling off aggressively. So, CSPs for Netflix or swing trade potential for Netflix is also worth considering at $93, $94. That's a pretty strong support, but I would wait for some confirmation as well. Although the L3 banker oscillator definitely suggesting for some accumulation from institutional buyers. So that's a good sign. So $93, $94, pretty good support to consider for Netflix as a swing. Okay, so rates are heading lower. Quantitative tightening ended. Do you think this paves the way for Santa rally and probably Q1 2026 as well? So Kenny, yeah, I think it, for the rates coming down, I think that's already priced in, right? So let me ask you this. If I were to ask you, are you making your decisions right now? Let's say today, if you were to make an investment decision, are you making your decisions knowing for a fact that Federal Reserve is going to cut rates, or still unsure about whether the Federal Reserve is going to cut rates? What will be your answer if I ask you all today? If you are making an investment decision today or tomorrow, or whatever decisions you made yesterday, did you make them under the impression and the fact that the Federal Reserve is indeed cutting rates? Or did you make them with the uncertainty of you don't know what's going to happen with interest rates on Wednesday? What would be the answer if you are making those investment decisions? Is it a known fact that the Federal Reserve is going to cut rates on Wednesday? Or is there still any room for doubt that we're not getting a rate cut? Because the markets are pretty much leaning towards a rate cut, and we're essentially at 90%, right? So I'll wait for a couple different answers. Sure about the cut, Temov says. Unsure about the commentary from Powell. Yes. So sure about the cut, right? And that, when we think about it, so is the next person, so is the next investor, so is the, trader sitting on Wall Street working for a hedge fund. Everyone kind of understands that the Federal Reserve is going to cut rates, right? 25 basis points on Wednesday. So what does that tell us? That tells us that that's already priced in to the market. It's not going to be a market-moving event. But what is going to be a market-moving event is the unknown, which is related to the 2026 interest rates. And that, I think, is going to be the most important variable. So, to answer your question, rates are heading lower. Yes, that's priced in. Quantitative tightening ended. Do you think this paves the way for a Santa rally? Only if the 2026 rates come down. And I do think that it will, given the rise in unemployment. We've seen it go from 4.1 to 4.2 to 4.3 and now sitting at 4.4. We've seen it creeping up slowly and steadily. Inflation's been a little bit reluctant. It's been a bit more sticky. But if you come over to the summary of economic projections, the most important number for tomorrow is going to be this 3.4% number. And I do think that this is going to potentially come down to 3.2. We might see another rate cut getting priced in from the Federal Reserve. Right now, there's only one for 2026. It's possible that we might get two for 2026 penciled in by the Fed. And that could be positive for the market. That could end us with the Santa rally that everyone's so excited about. So hopefully that answers your question. Again, hard to predict, but can give you a little bit of insight on what to look forward to for tomorrow. And if that number moves in the direction that we want it to, that will give us a nice little Santa rally to close out the year. Okay, so we covered that. What is the best strategy if I have too little cash? Double down on my positions, BMNR, BITF, HIMS, Oscar, to get out, and those possibly go down lower. So you never want a dollar cost average or add to my winners such as Nvidia, Google, Walmart. A loser is only if the thesis is dead, right? I consider a losing investment or losing stock only if I don't believe in it anymore. If I have a stock that I'm currently down, for example, let's take BITX, right? I don't consider BITX as a losing stock, right? Or like a loser. Why? Because I still believe in the fact that Bitcoin is going through a bit of a bear market. And right now we're going through a technical downtrend of lower highs and lower lows. And eventually, if there is a recovery, BITX is going to recover with it. So the only, question we need to ask ourselves if you are down on a stock is, where do you stand on it, right? Where do you currently stand on that stock? And if the thesis is intact, if your confidence is intact, if everything about that company that you researched and analyzed is intact, the only thing that's changed is the price, then it makes sense why you would want to dollar cost average and accumulate more at a better price. Because if your thesis for the company is intact and the price has changed, then it makes up for a better deal, right? But if the thesis changes, then yeah, you don't want to double down on a loser if you no longer believe in it. You obviously want to double down, triple down on a winner that your confidence is either growing in or something that has gotten even more attractive, right, price-wise. So yeah, Nicholas, to answer your question, the question really isn't about whether to double down on a loser. The question is where you stand on those companies and if your thesis and your confidence is still intact. And if the answer is yes, then those companies are trading at better prices. So you're getting better deals. But adding to the winners, Nvidia, Google, Walmart, for example, if you're getting them at a better price, then and your thesis is intact, like I said, confidence is strong, companies are executing, then why not? Why not? I love the wheel and I'm essentially living off of it. Yeah, Dave is a true living, breathing example, you guys. Very much, it's incredible to kind of hear his story. And I'm congratulating him all the time, and I'm super proud of how far like he's come with trading the wheel and actually living off of it and giving himself an early retirement this year. So I think 2025 definitely is going to go down in the history books for him, and it's incredible. So huge congratulations. But I understand it's difficult for some to buy a full contract, so I think it's good to look for swing trades as well. We've made a killing before. I'm thinking Hims could be a swing trade. Yeah, and if sometimes the options contracts can be larger, right? So for example, Meta, the option, the one contract for trading one contract, you need $67,000. It all comes down to the price of the stock, right? And so in those circumstances, looking at stocks that are priced lower, but you have high confidence in, can also work. So if Meta doesn't work, maybe SoFi does, right? Because for SoFi, you don't need $66,000, you need $2,700. Huge difference, right? If SoFi doesn't work, then maybe Oscar does or Hims does, right? The goal is really to work your way up to those capital requirements. Capital itself should not be a limiting factor to why you don't take certain trades or why you don't execute on your strategy. Because the way I look at options is not, making... So the way I always thought about this is like, okay, you can make money on a stock, right? Palantir, Tesla, finding the next winner, right? You can either find the next big winner that's going to make you a lot of money, or you can find the next best strategy that can be applied. Doesn't matter what the stock is, doesn't matter what the conditions are, you can master that strategy. So once you understand that strategy, you can apply it to any stock at any time with any amount of capital. And so that's really the whole point of running the wheel strategy, is to kind of master this, because the application remains the same. The only thing that changes is your capital. And then you work towards bringing your capital up from $10,000 to $100,000 to $1 million to, potentially even multiple millions of dollars. And now if you're running the wheel strategy, now you're just like living off of it. Doesn't matter what part of the world you're trading from, you know how to make money, you know how to make premiums, and you can just finance your entire life from it. That's the goal. That's the end goal, is to give everybody so much freedom that you can trade from anywhere in the world, your own time, and have mastered selling options. And you're just collecting premiums week after week. You're just collecting premiums. That's it. And it takes 15, 20 minutes a week spending looking at the options chain, managing your trades, and you're good to go. So it's really, the whole idea is giving back the time to everyone. Okay, so your view on Home Depot. So let's take a look at it for Megan. Definitely do share, everybody, your analysis on Home Depot as well. So it's a defensive name, right? So works really well in times of recession. And then, of course, depending on mortgage activity, home builders activity, all of that really plays a big crucial role for Home Depot. Dividend yield 2.6%. I do think that it's coming down to a pretty attractive support here, roughly around the 329, 330 mark, and a big resistance all the way up here for Home Depot. So that's going to be that resistance level to watch for Home Depot here. Again, it's been selling off aggressively, so we are pretty oversold at the moment. So right now we're seeing a nice little potential upside of 19-20%, resistance all the way up to 415, 416 for Home Depot. Okay, so covered that. My views on MOS, HON, and FASTs. So let's take a look at them one by one. I'm just going to go over the technicals fairly quickly. Markets open in about 8 minutes, so I'm going to try to cover all the technical analysis on these stocks here. So for MOS, it's coming down to that support, very, very good support at $23. Resistance all the way, back up to this level here at $36, $37. Very, very oversold as well. This stock market cap is about $7.5 billion. Volume's pretty decent. So yeah, this is one to put on your radar for a potential swing trade. But just be very careful as well, because it can be very volatile. I mean, it's been falling off 34, 35%. So very strong support at $23. Nice potential upside until 36. That's a good 50, 54% upside there. HON and FAST. So Honeywell, looks like a lot of consolidation here. It was making some higher lows. It continues to do so, actually. Higher highs and higher lows inside this uptrend at the moment. And yeah, I mean, it's at a support. I would also consider this as a potential swing trade. These are pretty good finds from Atul. Yeah, so congrats, man. This is pretty good. Two stocks, 2 for 2, pretty good swing trade opportunities there. Resistance up to 222 is going to be that level. Finally, FAST. I'm considering this is also an oversold stock ready for potential reversal. Okay, so this one's already been rallying higher. It doesn't seem like this is going to be the one. FAST. Oh, it's going to be this one. Fastenal. Okay, another one. This is the higher highs, higher lows. Very strong pattern of upside. So that's good to see. And it's now, once again, trading down to that support. We've got a pretty good range right around here, sitting roughly $39, $40, and a resistance all the way up to as much as $50. So yeah, those three are pretty good names, the ones that you just went over, and so those three are, definitely put it on other people's radars as well. So thank you so much for mentioning those. Related to above, or sell some winners like Nvidia, Google, gold. So Nicholas, for that, I think again it really comes down to what your objective is. I've always mentioned when to sell a stock. This is also mentioned in the one of the videos as well. When you should consider selling a stock is if you need the money for something else, if you find better opportunity somewhere else, and if your thesis is no longer valid, if your thesis is dead for that company. So if you believe that for Nvidia, gold, Google, if any of these three apply, then yes, it makes sense why you would want to take some profits, sell, and then rotate that into something else. But if you still believe in these three companies, or Nvidia, Google, and gold, so two companies in one commodity, and you don't have any better place to put this capital to, then it's better to just keep it in Nvidia and Google. Because that's what we're doing, right? If we're selling Nvidia to buy something else, that something else needs to be better than where the capital already is. Otherwise, it doesn't make much sense. Otherwise, you're just triggering a taxable event for not a great opportunity. We want the opportunity to be so good that it makes no sense for us to not take advantage of it. That's what we're here to do. Okay, time off. TOST and PATH. Let's take a look. I know you've been talking about those two companies, so I'm going to do my live technical analysis for you. I like TOST and I like PATH as well. Both of them, I saw your analysis. Absolutely incredible work as always. This is the higher lows. Very strong uptrend, and it's actually trading at a very strong support as well. Oversold, so that's good. Makes for a nice swing trade opportunity here. If it does break below this support right there, around 32.15, that's when I would take this position off. But that right there is going to be that stop loss for TOST here, with a potential target up to $43, $44. This is going to be that first resistance all the way up to $49, $50. It's a pretty strong contender for a swing trade. We actually analyzed 4 to 5 stocks that are all very good contenders for swing trade. So this is all incredible. It's already looking amazing, everybody. You guys are bringing some incredible questions and stocks for us to analyze. I love it. Okay, so support level for PATH is going to now be at around 1850. It is a bit more on the overbought side. I think it's already ran up quite a bit here the last couple of days. Few days, 50% rally. And so support level is going to now be at 1850. And another support down here around 1580. Exactly the opposite. 1850 and 1580 are two support levels to watch for PATH. Okay, a few more minutes left for markets to open. I'm going to go over some questions here. Sure about the cut, unsure about the commentary from Powell. We covered that. Vamsi, I agree. Great educational content. I just bought the technical analysis and I'm watching and learning content. Never had a formal teaching on this point. Pleasantly surprised to see how much I don't know. Yeah, that's incredible. That's incredible. And that's always amazing, right? I mean, I'm always learning how much I don't know all the time. Weren't we typically closer to 95% 1 to 2 days before MSOMC meeting? 90% seems low, so rather unsure for this perspective. I think 90% is still pretty much a done deal at this point. I think if it's closer to anything under 70% is when it becomes a bit more uncertain, but I think 85, 90% is essentially a done deal. And for the first time, got to see your famous red mic. That's awesome. That's awesome. 2026, red mic may make a comeback once again. So we need a cut from Jay Powell and Donald J. Trump confirming Kevin Hassett. Got it. So I've been DCing into Netflix 10 shares at a time. Should have waited a bit more, but I have 30 shares, so still room to bring my cost basis down. Yeah, I think Netflix is looking pretty good for value for money here. $93, $94. It's pretty oversold right now. One to consider, I think. Can we add Netflix to the shopping list, Dave? Yes, I'm going to be doing that this week. I'll add Netflix to the shopping list. I know a few of you have asked me about that. Talk about BMNR and ETH. Is it time to buy? So, for Ethereum and BMNR, as we already know, BMNR is going to be moving very much closer to Ethereum. Tom Lee seems to be very bullish on Ethereum long term. So, for me, this is a small allocation, a position which I can dollar cost average and buy, and it's going to be my Ethereum exposure. That's what it is. Whether Ethereum is going to rally from here, whether it's going to work out, whether it's going to see more upside, obviously nobody knows. But I'm selling calls. I have calls on BMNR that are going to allow me to lower my cost basis. I'm going to close them. I'm going to sell new ones. So I think options really gives you a lot of options. Without saying it, I think that's one of the best ways to lower your cost basis is to collect premiums while you wait for the trade to work out. I want to grow up and be Dave for sure. Incredible. That's amazing. I think Mike, you're almost already there. I think you've been crushing it in the Discord. So I love to see it. BMNR we covered earlier, same as BITX. I still believe Ethereum adoption thesis, but one ETHU decay hurt if it keeps dropping for long. Yes, it will. Only if obviously you don't do anything about it. So for BITX, for example, the decay is hurting BITX way more than the Bitcoin version of it, non-leveraged version of it. But my plan is to add more shares. You can kind of combat decay by being a little bit more aggressive with your DCA, because otherwise, even if Bitcoin recovers and I just hold on to it and BITX goes up, I might still not be able to recover my position if I didn't lower my cost basis on the sell-off. So that's going to be the plan with BITX, is to accumulate more. So I'm actually planning on adding a couple hundred shares more. In fact, 400 to get it up to 1,000 shares, and then start selling calls again, more calls. I was thinking when I grow up, I want to be as cool as Mike. Didn't we change your guys' names? Didn't we make Mike Dave and Dave Mike? I'm sure about the cut too. Not sure about what JP will say about the cuts in 2026. That uncertainty in itself could spook the markets. Yes, I think that is still a uncertain market environment of what Federal Reserve is going to pencil in for 2026 and what Jerome Powell is going to say. Yeah, good to see the community members. Thanks. Thank you so much, everybody, for joining. I really appreciate it. Markets are indeed open. So we are open. And yes, this is a members-only live stream. The link is going to be shared every day when we're doing this live stream. It's going to be a private one for all the members. And wow, look at that dump right at the open. QQQs are down about 37 basis points. You got the S&P 500 essentially flat right now, but NVIDIA dropping, giving back on all the gains from yesterday's after hours. Volatility is on the move again. It's back up to over 17. It kind of keeps giving us these cycles, right? It goes up, then gets crushed back down, goes up again, then gets crushed right back down. And last couple of days, it's back higher. It's back over 17 right now for volatility. So I think it keeps giving us these very, very good opportunities. The MoneyVest index is where? I think my computer might have just giving me some issues. But yeah, MoneyVest index, we are sitting at 3.43. So we're back in neutral for this market. And NASDAQ 100 also back in neutral. It's 3.42. So you can see we are in optimism up until December 5th. And then coming right back down to 3.42 here. All right, everyone. So thank you so much for joining. I really appreciate you all. Let's jump into our Discord. Talk more there, continue the conversations, and I'm going to see what I have to do with some of my options this week because I do have BITX, I do have BMNR, I do have Meta, which is now back out of the money, so that thing is going to be up a lot. So let's jump into Discord. All right. Thank you so much for joining. This is going to be your private live streams every single day, answering a lot of your questions in real time. So thank you so much for joining. Happy investing. I'll see you all in the next video.